Welcome back to the Daily Journal. We'll be going over my trade from the London session, the 2 a.m. continuation model. So starting off on the 4-hour chart as per usual. So looking at the chart, trying to understand bias, my eyes immediately go to, of course we're in a trend, right? We've been trending upwards and there was a massive new week opening gap, which ES tapped into. So we got some massive SMT here, okay? In addition to the fact that we've had this incredible reaction from that 4-hour gap, we also sweep that sell side liquidity, and this is a reversal candle on the 4-hour, and that third candle has expanded. So Asia has just ranged. My eyes immediately go to this new day opening gap. So my bias is bullish, and I'm looking for price to trade into this new day opening gap. And so next I need to look for drawn liquidity and find some structure. So immediately you can see that from this bounce at the 4-hour gap, there's a change in the state of delivery on the 50-minute chart, which confirms the wick from the 4-hour charts. You see price has expanded and now it's just consolidating. So immediately my eyes go to these red super highs, in addition to this gap that's sitting just above. So there's both liquidity and an inefficiency for price to trade towards, which is the two reasons why price moves: inefficiencies to rebalance and liquidity. So with this new day opening gap, my eyes also go towards these relative equal lows and this Fibonacci gap. So I'm asking myself, will price trade into, look, price could trade straight through this new day opening gap into liquidity and then trade back above us and probably form a wick or something like that. That's completely permissible. But I'm always looking for confirmation from the correlated pair. So you can see that ES has in fact dropped into this Fibonacci gap. So technically ES has done the same. And then we've closed above this range. So we've expanded, retraced, and continued. So for me, this is the range. This is a protected low. And this is the range I'm working within, right? This is this consolidation. So I'm looking for price to probably take out the range lows and then trade to the range highs. So market phase, expansion, consolidation. I'm looking for it to just sweep the lows and then trade up to the range highs. You can see there's our new day opening gap. Right, so time then price, right? So 2 a.m. also then always mark up my 3 and 4. We don't need to mark up the 4 for this example. So there's the 2 a.m. And you can see how price traded right to, but didn't tap into that new day opening gap. So this is where I'm looking to go long. But price has dropped straight into this and then traded higher, and this is what we call inducements. At the start of my trading career, and for many of us, there comes a stage where our bias is correct, our drawn liquidity is correct, but our execution on the lower time frames for entry and in validation is what we get wrong, because we're too eager to get into price. We see price trading towards our drawn liquidity and we don't get left behind, right? There's that FOMO, there's that impatience. But the longer you wait for your model to present itself, the higher your win rate will become, hands down. And you just have to accept that sometimes you may get left behind. And there's something to learn from that, right? So you can see that as we get closer to the London Open, we immediately trade straight down into that new day opening gap. And what else has it traded into? Well, the 0.5 of that wick. Remember, these lows are protected. So when I see price have a reaction like that, I look for any type of PD arrays inside of that new day opening gap because they are relevant. And the fact that we've tapped into that 0.5 of that wick, which is just an inefficiency, just imagine this as a fair value gap, and we had that reaction. Now I can drop down to the 1 minute. And what I see is the accumulation side of a market maker bar model, right? All these relative equal highs, this high sitting right above that other high that I was speaking about, that's obviously the 15 minutes relative equal highs. Then I see all these low resistance liquidity, all of that them, right? Swing failures, and all those inefficiencies. Look how many gaps there are. So right now for me, I've got my high time frame bias, trading from the new day opening gap to Asia's relative equal highs. Right? I've confirmed that swing low on the 4 hour. Right, so that's bias long. 15 minutes, I've then traded into that new day opening gap and then tapped into the 0.5 of that wick. And you can see now I'm starting to form a swing low on the 50-minute chart, which is confirmed with this change in the state of delivery. So this change in the state of delivery is exactly what you're going to find with these wicks. And now going into the start of that candle, I needed to confirm that this candle was going to close with a wick like that. I would have liked it to have closed above that, but I've got everything on my side right now. So it doesn't need to be perfect. So I gave it some time to open and to see the reaction. And the moment I saw a reaction like that, you can see much more clear now this reversal model is right. Expansion with expansion. There's that wick to confirm the reversal. So I immediately got in. Once I saw that reaction, I immediately got in. I got something, like that. I trade at the candle body there. Right, it shouldn't go any lower than this low over here. Maybe even this low over here, because you can see that candle doesn't have a wick. And that's just a form of an inefficiency. So the moments I got into that trade, stop loss at my invalidation point, and I left to go get a muncher. You can see how price traded into, and look at that wick. Look at that. You'll start to pick up on, if you've been watching my daily journal videos, you'll see that my model is somewhat the same. I'm always looking to trade this expansion, and you get this expansion when your 15-minute and your 1 minute align, or any combination of time frames for that matter. And this is every trader's dream. You enter a trade and then just bam, just head straight towards your drawn liquidity, which it eventually hits just over there. So you can see look at the expansion of that 2 a.m. candle. You've taken out the previous candle low. We now traded to the previous candle high. Look at that 15-minute expansion and that 1 minute expansion. And along the way, if you wanted to, you could, once you close above that, you've traded from that fair value gap here and then closed above. That's now a protected low. So had I been around to watch this trade, I could have moved my stop up to that, managed risk a little better. I could have entered it, added to my position over there, and just, watched it trade to the gap. The drawn liquidity. Great, guys. So I've had a few people asking to join, or if I teach my model. I do. I give it for absolutely free. I've got multiple PDFs just taking you step by step through all the different RCT concepts, how I understand them and how I put them together to form my model. So it's absolutely free. Come join the Discord. We got guys swing trading, crypto. We've got multiple live streams every week, and it's just a great place to hang out. So come get involved, drop me a DM, and I'll see you guys there. Otherwise, see you for the next Daily Journal video for the start of November. Cheers.